Hey guys, Akil Stokes here. Welcome back to a weekend trading edge video. I've been on the road a lot this week and I've got a soccer match for my kid a little bit later. So we're gonna make today's episode short and sweet, but I do want to take you around the markets as always and share a few of the opportunities that are on my radar for the week ahead. We're going to start off with the euro yen. This is going to be a continuation, and a lot of these analysis on this video is a continuation. So if you are making a habit of watching this each and every week, you'll often see that, hey, we spot something maybe weeks in advance, and then we have to do the whole waiting game to see if the market actually comes to the position and the location that we expected to go to or that we needed to go to in order to look for entries. And then boom, once we get there again, we'll usually revisit it and put it back on your radar. And that's what we're doing here with the euro yen. Euro yen is a bullish continuation opportunity that we've had on our radar for a while. That yellow line, if I go back, is a violation of our previous structure high, and we do have the expectation that price is going to go higher. Now, what we were looking for was a pullback into our previous level of structure, this level right here, and as you can see, when we're doing analysis on the higher time frames, it takes time, right? We had our violation here, and it takes 1, 2, 3, 4, basically a week to get back into that level. But you can see that we did get that retracement this week. We did end the week with an inside bar, right? An inside bar, for you guys who are unfamiliar, is a bar that completes completely within the range of its previous bar. So this big one right here is called the mother bar. This is called the inside bar. On a lower time frame, it looks like consolidation. As you can imagine, there's a bigger range here, and then it's a smaller range like that. But it is a sign of indecision. It is the size of a pause. It is the sign of the market kind of making up its mind on what it wants to do next. And when we have that at key levels of structure, like the one we mentioned, it's a positive sign that at least the market is thinking about maybe going in the direction that we anticipate. So we're looking for buys right here. If you're on a daily chart, obviously there's millions of ways you can buy, so we won't go through the entire list. But an inside bar breakout is one way you can use, meaning you wait for this inside bar to break beyond the mother bar to the upside, then you get yourself involved in that trade. If you're looking on a lower time frame, perhaps we had the inside bar break already. You can see a smaller inside bar right here. You can wait for something such as a double bottom, where price action comes down to our previous level of structure. Look left, structure leaves clues. We get a little retracement. We get a secondary test. We get a hold on this test right here. And then we look to rally up. So bullish continuation opportunity here on the euro yen, an oldie but a goodie, and one that is in progress or can be in progress for you for the week ahead. Next, we're going to take a look at the dollar Canada. This one's a little bit of the opposite, right? We've had our continuation already throughout the week. This was our main level of structure that we wanted to see broken. We told ourselves if this level of structure could be violated, then we'd see a run back to the lows. And that's right where we're coming to now, right? In my opinion, you don't want to look for any more shorts on this. There's a little bit of well, maybe a little bit more breathing room, maybe down to 133 evens if you're a day trader, but you don't want to be greedy and say, hey, you know what? This big move has happened. Everyone on the news is talking about it. Let me get involved. Because in my opinion, we are almost at the end. So this is where my counter trend trading brain kind of flips on and says, hey, price action is coming towards a previous level of structure support right here. There are not a lot of new sellers interested because, well, the cheaper price was up here for the sells, and those previous sellers are now going to look to be buyers, not in buyers of necessarily meaning they want to get a bullish position, but they want to make profit, right? We are in trading to make profit. And if you sold up here at 35.50s and price has come 200 pips down to 133.50s, you're probably going to take a little bit of profit. And if you are a seller, the way to take profit is to have buy orders, right? So not only do we have new interested buyers at this level before, how do we know? Because this was a previous swing point, a pivot point in the market, but we have new buyers in the sense of, and I hope not to confuse you, previous sellers who are buying to now get out of their selling position to make profit. Either way you look at it, we would expect kind of a shift from selling pressure to buying pressure at this level. So if you are a counter trend trader, keep an eye on price action as it comes into this zone. You can see our RSI is overextended as well. And RSI overextended, and I have my RSI set to 20, so I'm looking for those extremely overextended and oversold periods versus the default, which is 30. One's not better than the other, just my personal preferences. I don't want to just see oversold. I want to see massively oversold. But the RSI oversold doesn't mean that price is going to reverse, but it is a pretty good clue that, hey, we should pay attention to this level because something could be happening, right? We can just look no further than the past. Boom, right here, you can see RSI was oversold. We didn't reverse right as we went oversold, right? Went oversold a few bars before, but this was a clue that, hey, this may be happening. And then we look for our, at least me personally, I look for my candlestick clues for confirmation. So dollar Canada, the loonie, potential buying opportunity. Euro Aussie is next. This one's going to be a little bit simpler. Well, maybe not simpler for everyone, but simpler as far as analysis goes. We have an advanced pattern formation. So if you are familiar with advanced pattern formations, just draw those Fibonacci's on and it'll tell you exactly what we have. I'll show you guys in a minute. But this is going to be a deep Gartley pattern, right? This initial move here is going to be our X to A, our starting point of the pattern. Our first retracement is going to be our A to B. You can see we come past the 618, but we do not hit the 786. Those are my qualifiers for the Gartley pattern. We then retrace for our C leg right back up here. And if we extend down to the 127, that's where I personally trade it. That is going to give us a D completion for our Gartley. So you can see a very shallow Gartley pattern, or excuse me, a very deep Gartley pattern, the opposite of a shallow Gartley pattern, which I personally like because it's going to give me a great risk reward, right? Sometimes if you get a shallow one at the 786, you get a risk reward that is negative. If you get it right in the middle, sometimes you get a 1-to-1. Right here at the 127, I'm going to get a really good risk reward for this potential bullish Gartley pattern. And seeing how these advanced pattern formations don't hit at a spectacular rate, these aren't 90 or 80 or even 70% patterns. For me, the Gartley is usually mid 60s, like 60, 65-ish, around that area. Whenever I can get one that has a very good risk reward, it just does wonders for my expectancy. So potential bullish Gartley pattern here on Euro Aussie. I'm looking at 162.42s down to our violation zone, which is about 162.17s. Don't get cute with the stops. Even handle number under here. Definitely give yourself some room. Just continuing up real quick on the Gartley theme, or the advanced pattern theme. This is a follow-up from, I believe, last week, but this was a bat pattern we looked at on Euro Canada. I'm not sure if it was last week or in the live trading room. These things kind of blend together. By the way, if you want to join our live trading room, we run both a London session and a New York session 3 days a week, Tuesday, Wednesday, and Thursday, where we dig through the markets, we go through pairs, we do analysis, we do lessons. We had a great session this past Thursday. We had some newer traders who kind of broke out of their shy trader shell and said, hey, Akil, I'm looking at this. What do you think? We put together a few really good lessons on the IPDE process and how to analyze your charts in a rules-based way. I meant to share a few of them with you here on YouTube. I'm a little bit behind in life right now, so I don't know if I actually will or not, but we tend to do those on a regular basis. So come join us in the live room. Don't be shy. Come talk with some traders, spend a few hours a day with us. It's also a part of your 14-day risk-free trial membership, and that risk-free means there's no auto bill or any kind of sneaky sales. You just, sign up, you get 14 days on the platform. Then when your 14 days are done, you can no longer log in. We just kind of close the door and change the locks without you. So check it out, www.tier1trading.com. But this is going to be a bat pattern, right? So same type of M look as the Gartley pattern. And when I say M, right, these are called M and W shaped patterns, right? M if it's bullish, W if it's bearish, because it looks like an M and it looks like a W. You're welcome. But this one's going to be a bat pattern. So the difference between the bat pattern and the Gartley is the location of the first retracement, where in the Gartley pattern, we needed price to come to our 618. The bat pattern, I just needed to come to the 50%. The thing that's different about the bat pattern as well for me is the entry location is always going to be at that 886. So it's always a static entry, a consistent entry. And you can see it's deeper than the 786, which gives me a consistent risk reward. So bat patterns hit at a little bit of a lower rate for me than Gartley's, but we even that out by giving me a better consistent risk reward. I always have more than a 1-to-1 risk reward with the bats. With the Gartleys, sometimes it's hit or miss. So bullish bat pattern here at 146.73 down to about 146.19. Again, don't get cute with stops, even handle number and some sneaky structure right here below. So keep that in mind. But bullish bat, Euro Canada, check it out. Next, we're heading over to Aussie Swiss. No idea why I'm looking at Aussie Swiss, but it's here. I'm not a big Swiss pair fan, but a nice structure-based trade takes me back to my roots, right? You can see price action has ran across the channel to our previous level of structure, and we have held, right? Test, lower low, lower close. This is a sneaky level to look for a bearish counter trend trade. You got to be aware of the overlapping levels of structure. These are always dangerous. But if we go one more time frame down to the hourly, I guess if you're aggressive on the 4 hour, you can sell right here with the lower low, lower close being the entry. But if we go down to the hourly chart here, you can see that we've had a double top here. We've actually violated that double top, but have not violated structure. In fact, I didn't double check that with my eye test. Let me just see. It's not going to make a difference for what I'm going to show you with how we trade it, but I'm just curious now so I don't give you guys the wrong information. Yeah, we did. So we violated structure here. So on a lower time from your hourly chart, this would be a violation of structure, which means you couldn't look for the double top. I mean, the double top was already violated to begin with, but you couldn't look for another double top and all that stuff per my rules. But regardless, here's what I was looking for here. In order to cancel out one violation, we need a secondary violation. And this was going to be my trading method no matter what here on the hourly, where we wait for price to take out these lows, right? The lows of the previous failed double bottom, right? That again gives us another rotation. Look for that pullback after taking those lows out, right? Maybe back to the 60-cent level, and then look to catch a continuation trade down from here back down to this level right here with a target 1 and a nice shelf down here for target 2s. So again, a good example of paying attention to different time frames and seeing how violations can happen. But if we take out these lows, then this violation ends up being irrelevant because we've now put in another rotation. So probably more confusing than it needed to be for those who are on the newer side of trading. Just think about this here, Aussie Swiss on the hourly chart. We're looking for price to take out a previous level of structure, and then we're looking for a pullback trade in order to catch that extension down. Lastly, we're going to head here to the Dow Jones. Don't mind the funny drawings out there. We're talking about filters and whatnot. If you pay attention to the YouTube shorts or the stuff I put up on Instagram, you probably saw this little post here about how we filter out day trading pairs and get to kind of the grouping that we want to pay attention to. But we got a cipher pattern here, right? Here on the Dow. Dow's given us a lot of good advanced patterns lately, which is, I don't want to say rare, but it's been more frequent lately. But X to A, A to B, B to C, C to D. Our completion point was right at this 786 Fibonacci retracement, which we can see we already hit. The completion zone goes in from here to here. So if you're aggressive, you're trading right at the 786. If you're conservative, you're looking for your entry reason within this zone. Regardless, this is a bearish cipher pattern here on the Dow Jones. Now, before I let you go, I want to give you guys a little bit of an update. Didn't have time to put together a chart for you, but update you guys on the DKC. It's been about 2 weeks. We're still in that drawdown. Things are not looking better. I think when I last came to you guys 2 weeks ago, we were at about a 2.5 or 2-point-something% drawdown. That number has increased to about 5.6, a little bit more than that. So floating in the negative here with the DKC. If you guys are new to DKC, is a new strategy that I just started trading live back in, April 3rd, I believe. So we're just over a month. And not doing good so far, but it is only a month. You guys know we always preach, right? Bigger picture, bigger picture, bigger picture. You should not be defined by your trading strategy or your personal trading on a day-to-day basis, on a week-to-week basis, even on a month-to-month basis, right? You got to give time for your edge to play out. That's what edges do. You don't expect to go into the casino and win on every single trade. But if you have an edge in the casino, you expect to win bigger picture. So we're going to wait this thing out and keep trading it consistently, right? The numbers have proved that it's a profitable strategy. We just don't know when. But it's a good lesson. I like sharing it with you guys because a lot of you newer traders don't get a chance to see this. You're flooded with this instant gratification message all over social media where if it doesn't win right away, switch strategies. I've done this before in the past with drawdowns where I've gotten some really good feedback about Akil. I love that you show the suck, and then I love to kind of watch you trade out of the suck because although I've done that many times in my career, a lot of you guys haven't done it in your career. So it brings a little bit of a confidence to see that, hey, this is what the reality of trading looks like. It's not always fun. It's not always cars. It's not always money. Sometimes it's dealing with the emotional and psychological pain of sucking, but eventually you pull yourself out of the mud. So hope you guys are enjoying it. I'll come back and give you guys another update next week. Maybe I'm on the road again next week, so I don't know if I can sneak a video in, but I will try my best. If you haven't done so already, just make sure you check out the Trading Coach podcast. We're doing 5 new episodes a week, available on your favorite podcasting app. And until then, until next time, whenever next time is, plan your trade, trade your plan. Take care.